Nigeria. Wow, that's wonderful. So you guys, if you are close to each other, you can just meet to discuss more about the market. You can just meet to discuss more about the market. So yeah, and an important thing, don't worry, this webinar is recorded, guys. So I'm just going to post it maybe tonight or early tomorrow. So it is recorded. Don't worry if there is anything that you will miss. Don't worry, you'll just watch the rebroadcast. So okay, Nigeria. So okay. Okay, I hope you guys can see my circle. Can you see my circle in the screen?
Yes, we can see it.
Yeah, and one thing, just mute your microphone. Just mute your microphone, so that.
Oh.
Yeah.
Oh, sorry.
Yeah, no problem. Just respond by typing, so that only my voice come through, so that there will be no disturbance.
Okay, I'm muting it now.
Yeah. You guys just type. Just respond by typing. Can you see my circle? Just respond by typing. I cannot just confirm by one person. Yes, it's seeing the screen. Okay, that's wonderful. That's wonderful. So I will just go. I'm just going to ask just a simple question. Do we guys see that sometimes when, let's say, maybe it's a downtrend, sometimes when we enter maybe our positions, immediately when we enter our positions, the market will just go against you? Do you notice that thing, like when it comes to trading, even using price action? Like you can just enter the trade and boom, the market just goes against you. It's like the market has been waiting for you just to come in, and boom, it goes against you. Okay, if you are not hearing, just go to your audio settings. I think you will find an option there as usual. If someone is not hearing me, you can just go to your settings. Let me just type for him. Okay, so I was just speaking about when you enter a trade. Maybe let's say you enter the trade and now the trade goes against you. So now you begin to doubt, like, your analysis. You begin to doubt maybe your timing. Like, have I entered the trade in the right time? And you begin to ask yourself, like, how can I escape this? Because even after the market maybe goes against you, it will now continue again moving in the trend that you predicted before. But then now the problem is that you have no choice, because you've been stopped out. You have no choice because you have been stopped out. So this is what we call spike. So usually when you enter in the market, it can spike against you, and maybe you're being stopped out, or you have just closed your trade because of a loss. So now immediately when the market goes up and it spikes you, let's say you enter the buy here and it goes up, and it will then continue to now go down in the continuous direction that you anticipated in your analysis. So now the question is, how can you escape this scenario of spikes? How can you escape, like, spiking? Because it is the main thing that disturbs our price action. It is the main thing that disturbs our price action a lot. Like, I enter the market and it goes against me, but then after an hour or after minutes, it will continue then in the direction that I anticipated before. So now what you need to understand, guys, is that when the market has been moving in an uptrend, for the market to move in a downtrend, it cannot just turn quick like that. So for the uptrend to change into a downtrend, we need the part that we call in transition. Sorry about that. We need in transition mode. We need a transition mode for an uptrend to turn into a downtrend. I hope you all know that I'm a fan of taking trades from the beginning. Even last week we've been speaking about that, like how can we take trades from the beginning. So I hope guys you can understand me. If you can understand me, just comment so that I can know that we are still together. Just keep on commenting so that I don't speak alone. Uh, I understand. Yes. So it's only you, Michael, who doesn't have a sound. So let me just write to you privately. If you can understand, just keep commenting. Keep commenting. Understood. Okay. So usually, guys, for us to take like remember, as I said last time, that if the market is going up, guys, if the market is going up, it actually means that there are buyers in the market. So it actually means that there are buyers who are in the market if you find the market going up. So for us guys to make money, we don't need to be looking maybe for a buying opportunity. For us to make money, we need to be looking for a selling opportunity, because in the marketplace there are buyers. So if there are people who are buying, for us to make money, we need to be sellers. I hope it is making sense. So let's say we found the market now, it has been extended. So if the market is extended, guys, we are actually waiting for the market to reverse, to go down, to be taken over by sellers, because buyers have been waiting. So if buyers are waiting, people who are selling have to come in to sell the market. So it is not good that let's say someone is selling and you are also selling and your grandmother is selling. Who is going to buy? So if there are sellers in the market, you need to come with the opposite mindset, that I'm looking for a buying opportunity, because I cannot sell to sellers. So now the question is, how do we enter this reversal mode? Because if you are to see, let's say the market was in an uptrend and it reverses going down just like that, you need to know that it is highly possible that the market is going to turn and spike, and then it can maybe go in a transition mode and then go down. That's why it can form even patterns like candles, like head and shoulders, because it has to enter in a transition mode. First. So what is a transition mode, guys? It is whereby the buyers, they hand over the price to the sellers, or the sellers, they hand over the price to the buyers through a form of a range. So in transition, it is not in another way, but it is in a form of a range in the peak of the market. Like for an example here, let's say it was an uptrend. So let me just clear my screen so that it can look a bit better. Let's say the market has been in an uptrend like this. So in transition mode, it is basically when the market begin to show signs of struggling, and then after in transition mode, we are expecting the sellers to come in and push the price all the way down. We're expecting sellers to come in and push the price all the way down. So basically, if there is non-transition mode like this, it is very dangerous for you to press the opposite direction, to press the sell button, because we do not have the period whereby the buyers were handing over to the sellers. So for you to understand these, guys, you need to take the market in a real form. As I always make an example with an iPhone or with any product, you just need to take the forex market in that way. You need to take it like a real product. Let's say maybe this is an iPhone. So maybe for the price, or for the value to drop, it can't just drop suddenly like that. We need to see signs that now the price has been stagnant. The price has been going up since maybe last year. The price has been going up, but now the price, it's like standing in one position. So then we know that the value can drop. You see, the value cannot drop just suddenly. That we know that the iPhone was costing $200, but now it just costs $30. It can't be like that. So we have to have that transition mode, that decision mode. So what is what is this range for? The range, it is to calm the market, because we know that when the buyers are here, the momentum is actually high on the buyer's side. So then the market is highly active. People are buying, people are selling, people are taking orders, people are doing that. So now the market has to cool down. So when the market cools down, guys, there comes a spike. Then a spike will come. What is a spike here to do? It is here to activate. It is here to activate the buyers and the sellers. It is here to activate traders. Like, let's say your downtrend was going up and now it's in a transition mode, and all of a sudden the market will spike down to activate the traders, and the guys will say, oh, now the market is selling, now the market is doing this. Yet it is just there to activate the traders, and then all of a sudden it will continue to go up and resume its in transition mode, then maybe go down or go to the opposite direction. So basically, after this trend resumes, or after this trend begins, we actually expect sort of waves like this, sort of waves that are here to activate the market. And after the market is activated, people will be putting orders, and then that's where a decision will be taken. That's where the big boy is going to come in and say, now I can enter my position, because now people are active, so now I can invest. Then that's when the market is going to take direction. I hope it is making sense. I hope it is making sense, guys. Is it making sense? Yes. Okay. Me, I take it like, okay, if people can hear me, then if you can't hear me, it's probably your phone. It's probably your phone, because the other guys are just replying they can hear me. So if you can't hear me, it shows that the problem is not with me, because if it's with me, it means that all of you are not supposed to hear me. So just try, guys, to set your audio settings in the right mode. So I can hear loud and clear. That's wonderful. So I hope you guys now understand that the reason of a spike, or the reason of what happens, like when you enter a position, the market, then it takes you off, and again it will continue. So I'm trying just to open my chart, but it is still loading, and it is loading very slow. Let me try to share a chart here. Can you guys see this this chart here? Can you see this chart? And if you just respond like publicly, not just writing to me privately, so that we can all interact. Can you guys see the chart that I've just shared? If you can see it, just say yes. Okay. Let me hide this, and let me also remove this. Yeah. Okay. Just mute your microphone. Just mute your microphones. Okay. Just mute your microphones, guys. Just mute your microphones. So before, guys, I can speak about before I can continue, maybe to go deeper in the transition phase of the market, let me just elaborate what was happening here. Please, are you saying we can activate a position once we see a spike? Okay, I will just give you the information, the whole information, like how we can go about it, because it is not always where we are expecting a spike. It is not always. So I just want us, guys, to look carefully to this market here. I just want us to look carefully at this market here, but I just want to erase some of the things that I drew here, so that it can be a beautiful chart. Okay, guys, this is the USD Canadian dollar. Those who are in the Telegram channel, they know that we sold this trade. I don't know when. Is it in this week or last week? But then there is a time, like, is it yesterday, where I told them to begin to close some of the position and leave other positions running. So I'm just going to elaborate here how we took this trade and link it to what I was talking about. So let me just do this. So we entered right there. I think it is a bit up. So yeah, the chart is lagging. Okay, guys, so please, are you saying okay? Let me just speak about these things so that we can just go and continue with our businesses. So okay, guys, I hope you can see this pair here. So basically, what was happening in this pair, if you are to look clearly, maybe let's say if you are to zoom out the bid, you can see that the price is in a very significant level. It is in a very significant level, which is the resistance level. So if it is in this level, remember, as I always say, we are not interested in seeing the price approaching the level and we are excited that now price is in the resistance, so we need to sell. But what we are interested in, it is in how the price reaches that level. So that's what we want. How is the price reaching this level? So basically, this is the 4 hour. So when I execute my trades, maybe in the 1 hour, these things here, let's say this waves here and this waves here and this waves here and this waves here, they are basically going to be looking like trends. It will be an uptrend, it will be a downtrend, it will be an uptrend. But in the hard time frame, it is basically just waves. So if it is an uptrend, for us to take the trend from the beginning, we need to go to the hard time frame, like as I went to the 4 hour, and we look at significant levels like this level. So it is not every level a significant resistance or a significant support. So we need a level to be tested multiple times, like here it was tested here, it was tested here, it was tested here. So basically we're waiting for another test here, and it fortunately touched that level. So now what happened here, guys? What motivated me to wait for a signal here? It is this phase of the market. It is this phase. So if you are to look here, when the big boy took the price up here, you can see that his momentum was here, because even the first candle, this one, it was a big candle, and then he pushed all the way down, and there was a transition again. But the sellers at this level, they failed to push the price down, so it was just in a level, and the big boy came again, he pushed the price up. So meaning in the entire wave, the big boy was highly active. So when it reaches this level, remember, it was approaching our resistance. So we are basically looking at how the price approaches that level. How is the price approaching that level? So here the market began to slow down. So when the market slowed down, it's then transition mode. It might be happening that now the buyers are handing over transition. It can happen that now the buyers are handing over to the sellers. So when the market begin to struggle here, I hope you can all see that it formed a sort of a rising wedge. It formed a sort of a rising wedge. I hope you can all see that in this level here, it formed a rising wedge here. So basically, when the market has formed a pattern in a form of a transition or in a form of a struggle, then we know that we are going to enter our position when this pattern is being broken. So we are waiting for a break of the pattern. So if this pattern is broken, it means that the transition mode is now broken. It means that the transition mode is now over. It can happen that this break of a transition mode, it can happen that it can be a spike, and the market will return again to its transition mode and then take down the price. So for us to avoid the spikes, we have to first look at how let me just zoom. We have to look at how the market breaks out. Let me just erase so that it can make sense. we have to look at how the market breaks out at this level. At this level here. At this level here. So if you are to look carefully, spikes have been happening all the way from here. From here, you can see that the candles are formed with long wicks. So the reason I was confident to take this price at this level, it was because already the market has been showing a lot of spikes. The candles at this transition mode, they have a long wicks, which means the market was going up and coming down, closing down again, going down and closing up again, which means already there were a lot of spikes. So the final deception that took place here, it was this bias candle. It was the final deception, because a lot of people thought that, look at the size of that candle. Now I'm pressing the buy button. The market has resumed its buy. So when the market began to go down here with a lot of red candles which are big, now I realized that this can happen, that now the transition mode is over. So I waited for a breakout. When it broke out, I entered our trades here. So when we entered our trades here, now I'm going to enter. I'm just going to discuss the next part of it. So guys, is it making sense, or I'm just speaking fast and I'm just like giving you the information without even consulting? If you can understand. If you can understand, just comment so that I can continue. If you can understand, just respond. Okay, that's good. Okay, that's good. Okay, so let me just clear my screen so that it can make sense. Now I'm just going to enter in the most exciting and important part of price action. Now if we have then entered our positions in this level, in this breakout here, now the question is, okay, here is your stop loss and your take profit is down there in the pit. So now the question is, okay, if my take profit is down there, why did we begin to close some of the positions in this level here? Why did we begin to close some and leave some of the position running? So now here comes the answer. The interesting part, guys, is that a stop loss and a take profit, it is not for exits. I need you to hear me carefully. It is not for exits. A take profit and a stop loss, but it is there to maybe to mark your target where you are planning to take your profits. Not that it is a place that you need just to exit your trades in. The exiting of your trade will be determined by your analysis. So if your analysis doesn't work out, you do not have to wait for take profit. If your analysis doesn't work out, you do not have to wait for a stop loss. Because if you can see that, as I say, that if you can see that you have anticipated that the market is going to drop suddenly. So let's say now the market begin to fluctuate and go a little bit down, up I mean. Why are you supposed to wait until the market reaches this level? Because already what you have anticipated is already broken. So it means that now the market is no longer moving in your eye. It is no longer moving as you planned. So it is now moving against you, which means your setup is now not working. So if your setup is not working, why do you wait to lose maybe minus $50 here? Why don't you just cut it here at minus $10? Because it is not working. So what we do is that we hope that maybe it will turn without reaching my take profit or my stop loss. So basically, it also counts like how do we set our take profit and our stop loss. So same thing applies. If you have anticipated that the market is going to go down, like if it now struggles to go down, let's say it enters in such a level, you need to scale out your trades. You need to close some of the positions and leave maybe 1 or 2 positions running, because now the market is no longer acting in your favor. So you need to leave some of the position running and you close the majority. So I hope it is making sense, guys. Take profit and stop loss, it is not there to exit, but it is there to help you in terms of emergency. Let's say you are not in front of your chart, so it will cut the losses for you. But if you have time to be checking your chart maybe after an hour, after 30 minutes, and you see that now my setup is not working, there is no need for you to wait for the price to cut you up there. You just have to close it earlier. You just have to close it earlier. That's why I always say, guys, hope doesn't work in Forex. So if your setup is not working, just cut the trade without waiting for your take profit or for your stop loss. I hope it is sounding clear. It is sounding clear. I hope it is sounding clear. I hope it is making sense. I hope it is making sense. It is making sense. So guys, what you need to be looking at, it is to be trusting your analysis. So what happened when the market was at this level, it is that, okay, now I saw that the market, now it's like the buyers have came in, and now the market is beginning to enter in a form of a ranging mode or whatsoever. It might happen that now the big boy has come in again. He is here to continue the move, because like I was waiting for like a sudden drop. So basically we are still holding some of the positions in this trade. We are actually still hoping that the market will continue to go down, but our hope is no longer okay. But our hope is no longer based on the majority of the trades. As I said, that we can leave just some few trades running. Already have taken like a lot of profits. So now the running trade is holding on the profits that we have taken. So we are no longer risking our capital. We are risking the profit that we have taken at first. So that's also the reason for opening a lot of positions, guys. Like you open maybe 2 positions, so that when you close one trade, the other trade will remain running. And the good thing is that it will no longer be depending on your balance or your equity, but it will be depending on the profits that you have closed. Please zoom your screen. So yeah, I hope it is making sense. I hope it is making sense. I hope it is making sense. If you have any question, guys, if you have any question, you can just drop it. You can just drop it. I never ever opened an opportunity for questions, but let me just open it for now. If you have any question, we are just remaining with 10 minutes here. So in this 10 minutes that we are remaining with, if you have any question, just drop the question so that we can help each other, because that's what we are here for, just to improve each other, to share what we have, so that everyone can be a better trader. So guys, if you have any question, just drop it so that we can help each other. Question. Anyone with a question? I have. Can you show us? Can you show? How are you?
Hello.
Yes, I'm good.
I'm fine, thanks. I joined a little bit late, and on my side I could not hear you properly.
Yes.
It's like the audio was being cut. Yes, is it possible to get
a recording?
A record of this?
Yeah, I'm recording it, so I hope that the recording goes well, but I'm recording it, so I'll be posting it on YouTube probably tonight, just tonight or early in the morning, but yeah, today, just within few hours it will be running on YouTube. Yeah, can you
okay, all right.
Yeah, thank you. Yeah, in a range market, say 1 hour time frame, does it affect the other lower time frame? Okay, in terms of a ranging mode in a time frame, let's say 1 hour, as you said, does it affect the other lower time frame? Okay, what you need to know, guys, is that like when the market moves, is just, it moves like it's just one movement, but it is just that in the time frame things, it is here like to elaborate and to summarize the movement. So that daily time frame the movement is summarized there, but in the 15-minute the movement is like elaborated. Every detail is being painted out. So it's basically one movement, but in the lower time frame it will look like a bigger picture. So if a market is ranging in a 1 hour and you go down to a 15-minute, you will find a different thing, because there the range, it will not be a small range, but it will be like the price moving up and down in like big levels. It will not just be like a small range as you can see it in a 1 hour. So what the market does is actually one thing, but then it is elaborated and summarized in a higher time frame. Yeah, so the lower time frame is the bigger picture. So if you look, you see a range in a 1 hour, you basically know that in the lower time frame you will see like market moving up and down. But don't forget that what your higher time frame told you is the real thing, and you need to run with it. I have a problem. So you need to be like focused on what your higher time frame tells you. Okay, fresh media, you can ask. Yes, please, boom and crash. Sorry, bosses, you just like joined late. Maybe let's say if you told me earlier, I was just going to cover boom and crash, because now I'm already left with 6 minutes. So I think the next webinar, guys, it will be specifically for boom and crash. It will be specifically for boom and crash. So I'm basically going to do the next webinar probably tomorrow or the day after tomorrow, not after that. So basically tomorrow or the day after tomorrow. So you can ask questions, guys. So I will just share my Telegram group link, a free Telegram channel, so that you guys join there and you don't miss any webinar anymore. So I'll just share the link. Yes, fresh media, you said you have a question. So yeah, you can ask. You can ask. Sam, can we get the range on the lower time frame in an indecision candle or a time frame? Okay, Sam, it actually depends on which, to your side, which is a lower time frame and which is a smaller time frame. So what I can say is that you do not have like the gap between your time frames. It should not be a big gap, because it will disturb your analysis, it will confuse you. So let's say if maybe the 4 hour is your higher time frame, if the 4 hour is your higher time frame, so there is no need for you guys to go beyond the 15 minutes. So we know that the rule of 3 time frames, that when your 4 hours is the higher time frame, you'll also have to check with the 1 hour and end with the 30 minute, so that you avoid the confusion. So basically your confirmations will be based around these 2 time frames. Your confirmations will be based around the 1 hour and the 30 minutes, because what you go for in the 4 hour, I hope I spoke about the top down analysis, that when we go there to the 4 hour, we are there to look for the momentum. That is it buyer's market or is it seller's market? So if it's buyer's market, we are basically looking for a reversal. If it's seller's market, we're also looking for a buy. So that's what we go for in the high time frame. That is it the good time? Is it the right time to go with the sellers or to take the side of the buyers? So that's what we go for. So when I saw that now price has went up and has approached this level, I saw this on the 4 hour. So that's when I went down to my 1 hour and I found the rising wedge. I found the rising wedge, and that's where I entered the breakout, which is probably in this area here. So I hope it is making sense. Will you please keep us through volatility indices one day? Yes, I always speak about volatility indices. Even in the last webinar, we spoke about indices. So in the next webinar, it will be boom and crash and the other indices. So yeah, I just want you guys to not lose the bigger picture, because even the boom and crash or the volatility that you want, it is trying to mimic the forex market. So if we have the knowledge in forex trading, we are actually going to dominate, and we are actually going to crash boom and other indices. We'll just dominate them without any problem, because as I said in the video I posted on YouTube, that these indices, they are just like simulated numbers, mathematical numbers running on just on just a system trying to mimic the real market. So if we have the understanding of the real market, then we cannot be defeated by what is trying to mimic what we already know. So I hope it is making sense. Will you please take us through? Okay. So yeah, guys, please. Okay, let me just post the Telegram link so that I don't forget, because even last time I think few people received it. Where is this thing? Let me just post. So yeah, guys, let me just share to everyone. So yeah, that's our Telegram link, guys. I hope you can all see it. That's our Telegram free group link, so you can just join it to find those free signals, those free analysis, and this webinar, so that you don't miss it. Are you correct about the knowledge of the forex market being applied to binary? You cannot just apply it just directly as it is. You cannot just apply it directly as it is, because the behavior is not exact. Although the indices are trying to mimic the market, but the behavior is not exact. So you just need to be studying their chart and try to figure something out. You cannot just apply it like just as it is. So you need to be understanding those instruments. They are not moving the same, although they are trying to mimic the market. But when it comes to forex, there is the reality of the economy. There is the reality of supply and demand. But in indices, there is no reality of supply and demand, because there are no buyers, there are no sellers. There is no real trading happening there. So you just need to find something. You just need to find a strategy, a certain strategy, like from the forex basics, from the forex knowledge. Please answer my question. After a long bullish candle, there is a pin bar candle showing a sell signal. Why don't you go for it then? I really don't understand the question. So because, guys, I'm left with 1 minute with seconds actually. Okay, the meeting has just ended. Let me just